Oatly has been on the market in less than 2 weeks and it's already risen about 35%. That is large gains in such a short amount of time. Well, especially for some investors. So you need to ask yourself, is there more to be had and should you invest now? Well, that's what we're going to talk about here today on the PlantStock channel. If you're new to the channel, welcome. If you're not, then welcome back. And as always, I would truly appreciate an early thumbs up since it does help spread the videos to more people. And if you want to keep getting more information regarding other plant-based companies like Beyond Meat, Tattoo Chef, the very good food company, or Oatly, then make sure to subscribe and don't forget that bell button. Thank you, folks. I truly appreciate your help. Now, if we take a look at the stock chart, ticker symbol OTLY in the NASDAQ, we can see that from day one, just about 1.5 weeks ago, it's gone up about 35% almost. Well, for some investors, as we talked about before, it did open up at 17, but only at the pre-IPO, which means for people who have more money and institutions. So they could actually invest at these prices. But for us, mere mortals, actually it was more around $22 when it opened up. So for us, it's gone up about 8%. And we can see that's what it's gone up before. And it's been a little roller coaster here in the beginning, but then it's going up more and more. It doesn't show here, but I can see that post-market is actually up about 4 to 5%. So there could be an additional 5% going up here when the market opens up tomorrow. So for the common investor, it's gone up about 8% in totality right now from where it started around $22. And for the pre-IPO people, about $17, which would make it about 33.5%. So the question for you guys, for the ordinary retailers, the you and I guy, is there more to be had? Well, that's what we're going to talk about now. I found an interesting article in Motley Fool, 5 things to know about Oatly stock. And I think these are quite good. They're not perfect, but they're quite good when it comes to making a choice here. So number one here, the positives, right? Oat milk is having a moment, right? So today it accounts for about 14% of the plant-based milk retail market. And like so many other things, when it comes to plant-based dairy alternatives, it is what is in right now. I mean, at times it's been soy milk, other times it's been almond milk, and right now it seems that oat milk is having its moment in the sun, right? And the second thing here that is positive is the growth opportunity is enormous in many ways. I mean, Oatly generated about $420 million in revenue last year, which is more than double the year before. And for you who don't know it, there's been talk about that it might actually double once again in 2021 to around 840 to 850 million. So that sounds really good. Nothing we know as of yet, of course, everything depends, but still looking good. And something else that is obviously positive is that according to this article, the global plant-based dairy retail market is worth about 18 billion, or at least last year, and it is growing by the minute. And I do think we could expect, I think the articles I've read about 2026, 2027, something around $75 billion worth. So it's growing and it's not so strange. And that's the perfect thing. It's what they're talking about here also, that maybe this isn't the place to talk about if this is healthier or not compared to cow's milk. I think you know my stance. I think it's quite obvious that it's way healthier than cow's milk. But like they say, and I've said that several times, it really doesn't matter what the science actually states. It is what people believe. And if people believe that plant-based dairy alternatives like Oatly is healthier for you, well, then it's going to explode and it's going to become larger. Now, some things to think about before then, where you should be a little more cautious is, and I think we know that this is a growth company, right? Oatly is not profitable at the moment. And according to this article, it's not even close to turning a profit. And even though that the ingredients in themselves are quite inexpensive, they're still more expensive than typical milk, which is not so strange when it comes to subsidies. And that might change in the future, but that's another story. We'll talk more about that as we move on. But the company only managed a gross margin of around 30%, and their selling, general, and administrative costs total at $168 million in 2020, about 40% revenue. So that's about 40% of the revenue is basically costs, right? And then Oatly booked an operating loss of 47 million and a net loss of 60 million for 2020. And both metrics worsened from 2019. So obviously that's a bad thing, but not to be surprised over, considering again, this is a growth company and they're expanding like crazy, but something to be wary of, right? And something to take note of is that Oatly is, like they state here, going all in expansion. Within the next 3 years, they're basically putting down about $1 billion in actually building out their facility and expanding. So that's a lot of money, of course. And as they state here in the article, I mean, if Oatly and people who believe in this trend, if it does actually pan out, I mean, this expansion is really great. But if they're wrong, if there's too much competition, and I know a lot of people are worried about that, then this could actually be devastating in the long run, because considering these huge amounts of money that's going to be put down. But then number 5, and I've talked about this since the very beginning, this stock is very expensive. And it states here that it's valued about 12.5 billion as of this writing, and this is not the case anymore. It's actually valued around 14 billion now, right? So it's gone up quite a lot, which means that the PA's ratio, the price to sales, is about 30. So a PA's ratio of 30, that's pretty high, even for a popular growth company. Normally, as we talked about, Beyond Meat right now, it was actually down to about 16, 15, but now it's up around 21, 22 again, since this latest running towards the moon situation, which could be Wall Street bets. We don't know as of yet. There are speculations regarding that. But anyways, that's something to think about, right? And something to keep in mind here then is that Beyond Meat, that is, it states here that is valued now about 8 billion and produce revenues of 325 million. I don't know where they're getting their numbers, because actually they were a little above 400 million in 2020. And it's a little more now. I think it's around 9 billion at the moment. So obviously this is a few days old. But again, neither company is profitable, and both companies are going up against commodity products. But then again, Oatly has done quite well when they moved into other countries. Not to say in my home nation, Sweden, they're the dominant force here when it comes to plant-based dairy. I think it's about 53%. But it is stated by several analysts out there that every time it moves into a new country like England, Germany, it basically takes over the market and becomes the industry leader. So they're doing well. And the question is if they can repeat this in the US. We'll have to see. So again, should you invest now or should you wait maybe, depending if you're interested at all? And I think, again, we need to take a look at another thing then. And we talked about that briefly too before. Let's look at Beyond Meat's IPO here in 2019. It says that the price of the IPO was at 25 per share. Basically, same thing there for the very rich. Normal people, it jumped up directly to 40 and quite quickly to $65. But it had a valuation of 1.46 billion, 1.5 billion when they open up. And Oatly already at their IPO, 10 billion, right? So that's basically 5 times more, right? More than 5 times more what Beyond had. Obviously, Oatly still have about 400 million in revenue last year, and at this time, Beyond only had about 90 million. So sure, there could be some logics between behind that, but still, there's a huge difference to open around $1.5 billion and then fly up, and then like Oatly to open up at 10 billion and now already at 14 billion, right? But if we take a look at, again, the stock chart here, when Beyond Meat opened up, down here, about $65, and it just took a few months and it flew up to around $240. Then after that, shorts took hold of it and started shooting down more and more. And in less than a year, it was actually down to around $57, right? And then with time, and I think here we're getting close to the Rona day, so maybe not so strange, but then shooting up again here roller coaster, up and down, emotional roller coaster for a lot of people. And as we know, later in January, it shot up to about 220 and later went down again. And here's their talk about Wall Street bets, but it could also be related to a lot of moves actually panning out, and it's up at $145 now. So what should we take from this? Well, I think when it comes to Oatly being that overvalued and at such a large valuation when they open up, I don't at this moment. I actually see it as a great company and a company I want to be invested in with time, but I don't see them being able to shoot up the way Beyond did, because Beyond at that time was basically a much smaller cap. Now they're a mid cap, right? But basically a small cap. I think normally you say within 1.5 to $2 billion is a small cap, right? So, and basically, I would say that it's a lot easier to get a lot of people and retailers going in and buying into those prices then. And when institutions start moving in, obviously we'll have a larger effect. I have a hard time seeing that Oatly within the next couple of months is going to shoot up 3-4 times, right? Temporarily anyways. I mean, it could happen. It's going quite well here. But remember, it looks, you look at this and you think, oh, 7%. It went up 7%, but it opened up at 22, right? 1.5 weeks ago. But again, you have to be cautious, I think, with this company. Because personally, what I believe is going to happen is that people are going to take a look at the company after a while and take a look at their valuation. It's $14 billion. Beyond Meat right now is trading between, I think, $8 to $9 billion. Beyond Meat, as a stock company, has been out there longer. And also globally, I would argue quite seriously that globally they're much more well known than Oatly right now. That might change with time. They'll be more equal maybe, but still, even though they're in the same sector to some extent. Both are plant-based, but sure, one is plant-based dairy and the other is plant-based meat right now. But I still think that when people look at them, they're going to be like, Oatly seems interesting, but let's look at this other company that's also really big in the plant-based space, and it's worth about $5 billion less in valuation. And they have the same amount in revenue from last year. Well, I think there's a chance that if people haven't already started to do it, people might start to rotate their money from Oatly into Beyond Meat, or just choose Beyond Meat right now. It remains to be seen. Now, I have to be honest, I think you know that. I initially invested in Oatly at their IPO when it was around $22. Basically, just after 1 or 2 minutes, I put in not that much, just a small sum, around $6,000. Just wanted to have it there. It's a Swedish company. I've been buying their products for about 10 to 15 years. You know, you get a little emotional, and I truly, truly believe in this company long term. We're talking 3, 5 to 10 years from now, right? So definitely at the valuation of $14 billion right now with a PA's ratio of 30, they're going to grow into those numbers sooner or later, and they're going to expand beyond that. Of that, I'm certain. But the question is when? And that doesn't necessarily mean, of course, that they're not going to fly up more than this. I wouldn't be surprised to see them at $25 to $30, $35. I wouldn't be surprised at all when it comes to hype being a new, bigger, larger plant-based company. But I have a hard time seeing it staying there, remaining there. Again, remember Beyond Meat's stock chart, right? I mean, take a look at it here. I mean, basically 2 years ago it was here, and now it is here again. So, and it's been really, again, a roller coaster. I need to find another word, right? So that's something to be aware of. So I do believe personally, and folks, I'm not a financial advisor, but again, I personally believe that Oatly at the $23 thing right now with a valuation of 14, I do believe they're going to fall down with time. No matter if they fly up to $30, $35, whatever it may be, I do believe they're going to fly down again. I could be wrong. I've been wrong in the past, but within a couple of months, the very least, I do see them going under 10 billion, to be honest. So that's something to keep in mind. So the question again is, should you invest now? Well, in my opinion, after taking a little deeper look into the financials of Oatly and actually letting the feelings subside a little, then I realized that I want to have a better entry point, even though it's only $6,000. So I actually sold out and got a little plus, just a very little. I don't care about that. And I'm waiting to get a better entry point. But if you want to invest now, it is probably important that it's just a small sum, right? A small sum that you could be without right now. And if you want to keep then investing in a couple of months, then dollar cost average, like I would say every once a month maybe, to see what happens. That's just my opinion, the way I would do it now with this kind of company. And it was tough to actually sell off those $6,000 because I truly, in many ways, I really like this company. I really love the CEO. I like his personality, what I've seen so far, and I like his vision. I think I actually love his vision. Same with Ethan Brown. But again, I stick to the rule to not invest too early after an IPO, especially not during the IPO. I mean, it makes sense maybe if it's really small companies that could totally fly off and you just put in a little amount of money, you can see amazing things happening with that. But with such a middle cap company like this it's quite risky. So personally, I'm waiting for a better entry point. I do see a lot of great things happening with this company long term, but again, it's a bit rich for me at the moment. But I could be wrong. We might be in 1 to 2 years from now and it hasn't actually flown down under 10 billion and it's up to 20 or 30 billion. But again, it is a roller coaster. It's a growth company. So for me, historically, I've learned it can go really fast up and down. It's not about timing the market here, folks. That's not what I mean. I just feel that this, to me, feels like an obvious occasion where I do actually believe that it will start falling down in the next couple of months or so. Folks, let me know down in the comments what you believe. Well, that was it for today. I truly hope you got some value from today's video. And if you did, make sure to smash that like button. And if you want to keep getting more information regarding Oatly and other plant-based companies, like always, subscribe and don't forget that bell button. Thank you, folks. Truly appreciate your help. And as always, don't forget, this was not financial advice. These were just my own thoughts and opinions. It's important to do your own due diligence and invest safe. Have a wonderful Monday and hope to see you soon. Peace out.